What up, guys? How we doing? Welcome to episode 3 of Backtest Fridays. I have not been really consistent doing Backtest Fridays because I have a bit on my plate right now, but it only gets better from here. So we are at a point within this series where we need to actually speak about the DXY because it has been affecting a lot of our trades and it's going to be a major factor in the direction of the market this week. So what is the DXY? All right, so I want everybody to pause their video now and just read off what this is. So pause the video now. Boom. All right, so you should have paused the video, read what that is, and have a tiny bit of understanding of what the DXY is. So basically, the DXY is an economic health indicator of the United States dollar paired against the other major currency pairs, mainly comprising of euro, right? So what that says is basically, Jamaican dollar, right? So what that says is basically when the DXY is going up, euro is going down. When the DXY is going down, euro is going up. See? Simple, right? So we are at a point within currency trading for the week that we need to know what the DXY is going to do because like it's a channel. See if you guys can pick that out. There's a channel right here. So lower part of the channel, upper part of the channel. Let's fix this up. Use this week, right? Point A, point B, point C, possible point D. So throughout the week, we can actually have a rejection of the top of this channel to push DXY back to the lower part of the channel. So we need to examine this specific area right here to see what is up. So with DXY being at the top of the channel and seems to be transitioning on the lower time frame with a level of support being taken out along right here, that tells us that euro also may transition to the upside with this level of resistance being taken out right here, right? So using the DXY, we can help to add confluence to certain moves we would like to capitalize on in the market. Because if the DXY rejects here and moves towards the bottom of the channel, euro will reject here and move to previous highs or maybe move to a level of broken support, right? So we need to use that to capitalize on these cases, right? So let's examine what happened for euro this week. Euro has been melting. All right, let's find out where we want to start. 1, 2, 3, 4, 5. So right here. Moves that happened this week in euro. So euro had a minor low time frame trend line it was respecting for most parts of the week. It came up to a previous level of resistance all along here, and look what we got. The market blessed us with a triple top. 1, 2, break of support, retest of previous resistance, and absolutely melted all the way to lower lows, right? So that's a simple move that happened within euro this week. Nothing too hard to capitalize on. It did give us a minor channel also to work with. Rejected the channel, breaking out 1, 2, 3 times right along there and absolutely fell. Simple trades. All right, so let's get into a little reason why this level was so strong. So this heavy push to the low side and then pull back right here and continued pushing down to the low. This is the last level where sellers had the chance to capitalize off this heavy impulse move, this heavy institutional push to the low side. So that tells me that they're pending orders sitting all along right here. The rejection of the level the first time with this extremely huge bearish candle was a heavy indicator that orders were packed along that area, but we could not effectively trade this rejection as there was no low time frame transition here. The transition only came along the break of this level of support right here and then acting as resistance up here, right? So that's one euro move we could have capitalized on. Another euro move we could have capitalized on this week was this break of support, future resistance, simple, easy trades. It's the same thing over and over and over again. Simple trades. Let's get down to the low time frame and see why that trade actually happened. On the low time frame, let's get this to the back, center back. It's better. On the low time frame, we see that this was the last level supporting this uptrend on the low time frame. It was taken out and gave us a nice bearish variation along that line with 1, 2, 3, 4, 5 candles completing it. All right, let me get this so you guys can see what I'm talking about. This right here. That's one entry opportunity coming off that line. If you miss this entry opportunity, the market in fine order gave us another entry opportunity, rejecting the past level of low time frame resistance with another bearish variation all along right there. Any one of those two trades could have been, oh, whoopsie. All right, here we go. Any one of these two entries could have been, they're beautiful because euro absolutely melted after, and this entire space was like 12 pips. So weak entries if you go on the higher time frame. So that's one move. Two moves that we captured on euro. Is there any more? Yes, the market gave you another move to capitalize on the H1 past support. You know the deal, future resistance. Yup. So on Friday, when DXY started rejecting the top of this channel, oh, by the way, I see a minor little head and shoulders here. I don't know if anybody else sees it, but let me just point it out. So we have the left shoulder, the head, and somewhere along here would be the right shoulder. We have a neckline somewhere here. Market may push back up, reject some form of past support as future resistance to continue to the low side. Yep, just a little thought, my little 2 cents. Yeah, but the fact that DXY is rejecting the top of this channel, we saw a low time frame transition on euro. So let's jump out onto the major weekly time frame. Whoopsie. All right, let's jump out to the weekly time frame. Right, so we see a lot of indecision, a lot of buyer sensitivity along this level right here, right? So this is ideal areas where people would be looking to either take profits on shorts from all of these levels, and buyers are looking to step into the market along this level also. So refining this information, we'll go down to the daily because we really want to capture where the buyers are situated within the market. And based off the daily, it is telling us that the buyers are situated right along here, right? Hence, we have some form of interaction with this zone. We didn't have just a heavy bearish candle going through the zone because some amount of buyers are present within this area, right? So taking this zone off the weekly, guys, remember, seconds make minutes. In order for you to have a bullish candle on the weekly, you have to have some form of transition within low time frames, i.e. H1, H4, all of them, right? So looking at this level on the M15 time frame, we identify that this was maintaining our structure. This particular M15 level right here was maintaining our structure, right? So the market rejected this level, broke this level, and ideally came right back to the base of this level. Like, this entry was so quick. All right, let me break down something for you also. So this wick right here, this very bearish wick right here, if you look on the DXY, there's also a very bullish wick right here, right? So on Friday, this happened. Advanced GBP for that quarter was up above the forecasted and up above the previous by 1 entire percent, which is quite good for the US economy. That's very good, which produced this heavy bullish push. But what this push is telling me is that buyers tried to take control, but they failed. Institutional sellers control all of this area. Where's my drawing tool? I need to get crazy. Yeah. They control all of this area. So this buyer attempt was a pure fail. Push to the low side, telling us that the market is looking to really reject the top of the channel. Back to Euro. So with that happening on DXY, with the good news coming out for the US economy, Euro plummeted, giving us a perfect entry opportunity right off of this level where we know buyers are concentrated. So entering here has the potential to give you a very long swing. In addition to the transition by breaking this level, low time frame is saying push to the upside, but high time frame is telling momentum to the downside. But remember, seconds make minutes. Alright, enough for Euro. Now we are over to gold XAU. This pair has been pain. It's just been heavily bearish. Heavily bearish. Main moves have been coming off the point C rejection of this trend line. You have point A right along here, point B right along here, and the point C right along here. A majority of the moves have just been capitalizing on sellings. But throughout this week, Euro has come to a level of, sorry, not Euro, gold has come to a level of support all along right here. Going down to the low time frame and examining what is happening, we only got one sell opportunity within this area. So this is the level that is maintaining the downtrend of gold. So market retracing back to this level and giving us a nice double top with low time frame transition was clean sells, clean sells. So you'd been able to capitalize on entries anywhere along this area. Put your stops above the zone. You can give yourself a 20 pip stop, taking trades further down. Unfortunately, we weren't able to get anything further than 115 pips, but the beauty of it is that gold also respects the DXY in some way, because gold is a safe haven currency. When investors are fleeing from the United States dollar and fleeing from the euro, they have the opportunity to go with gold. So seeing that DXY is rejecting the top of the channel, you may see a little bit of buyer momentum within gold. And also gold has transitioned, right? Pulling back out to higher time frames and examining this zone right here. Come on, trading view, don't be slow. All right, let's refresh the sites. Trading view being lame. Alright, so going back over to gold, with gold rejecting this level, Ice Cream Man is here. Alright, with gold rejecting this level on low time frame, even though we're able to capitalize on sells of this level of structure within the market, we're able to capitalize also on a transition of this level, which was maintaining low time frame trend structure. All of this level right here. So the market made new lows, came up, tested highs twice, but was rejected, got a push through the highs, and gave us a nice bullish engulfing all along this level. So let's highlight this bullish engulfing. Highlight. So this is a perfect entry opportunity right here. Enter off the bullish engulfing. Stops below this level, so a 40 pip stop loss. And we could take this trade actually up to the daily past support, which is right here. It's just 130 pips. So I'm actually monitoring this to see if it will break this daily level of past support acting as future resistance. Let me just put that in for you guys. This level is right here, right? If we could break this level, I anticipate that gold may make another test on this trend line, which gave us a point D retest of this trend line. This would be point C. All right, let me explain this way. So we have a point, come on, trading view, load. Why is this not loading? All right, so we have point A, point B, point C. We may have a point D test of this trend line if this level of support, past support acting as future resistance breaks. So anticipating that would give me somewhere around 203 pips. Maintaining this trade and supporting factors for this trade was actually also a low time frame trend line all along this level. Right, when that US dollar news came out, it caused gold to spike down, giving even better entry opportunities for anybody that capitalized on those. Yo, big up my friend Jeremy. You know, me and him did sit down and break down this trade. We took it live. Zimmy up top, you know, biggie. Alright, so that's all I had for gold this week. Moving on to AU. Come on, AU absolutely melted. So this trade came from a higher time frame. It actually didn't happen this week. This is just the trade playing out. So AU had a point C rejection of a high time frame trend line also. Point A, point B, and point C right along here, which pushed it all the way down to daily support. So if you notice, a lot of these pairs are somewhere around the region of their daily support, and DXY is in the region of its daily resistance. Remember, DXY does affect all currency pairs because it's the US dollar. Anything that is paired with the US dollar, the DXY affects it. Simple like that. Alright? So the only moves that we were able to capitalize on for Australian dollar this week is a low time frame break. Where was it? A trend line? Oh, here it is. There you go. So we have this trend line. This trend line broke, and it gave us a retest of past support along right here. Sorry, past support as future resistance was a quick retest right along there. But breaking down the main move that happened was we had a level of support on the a level of resistance along the daily, all along this level right here. There we go. Boom. All of this along right here, major resistance. Sell. Right? All of that was an excess supply of Aussie dollars. No one wants to be buying Aussie when Aussie is everywhere. Supply and demand. So I actually lost a trade along right here. Let me break it down for you guys. So on the low time frame, this is what I had maintaining on the low time frame structure, right? So with Aussie breaking this level and giving me this bearish indication along right here, I went ahead and took a sell of this level because come on, we're at a point C on a daily trend line. I gave myself about a 25 pip stop loss and I got wicked out. So I lost this trade, but it happens. But the market gave me an even better entry opportunity because this level right here was what ended up maintaining this big push, creating highs off this level. So when the market broke this level, gave us this news candle that came up here, that big impulse push to the upside, I capitalized on it. I took the sell, and then it gave us an even more confirmed sell right along here. Highlight. Boom. So as it gave us entry opportunities, as it gave us quite a few entry opportunities, capitalizing on these entry opportunities and taking this trade to the daily level of support would have given us somewhere along the lines of 173 pips. Nice swing trade right along there. And in conjunction with everything else I've been saying today, with Euro transitioning looking like it's going to push to the upside, gold transitioning look like it's going to push to the upside, it's the same story on Aussie. If we look at Aussie's daily structure, Aussie's H1 structure, wow, trading view, you are really moving slow today. TikTok. Yeah. In addition to all these other pairs transitioning to the upside, Aussie is also transitioning to the upside by taking out this level of resistance and giving us bullish indications. So looking towards next week, I'm looking for longs. I'm looking for probably retests of the lows and then longs into next week. GBP JPY Bay has out here been melting off this H4 level of resistance. I remember in the second backtest Fridays or the first, yeah, it was, I think it's the second backtest Fridays I spoke about this level. This level has been pain. Only trades to capitalize on GBP JPY are just simple break and retests on the H1. I think there are like 3 of them. So we had one right here, past support, future resistance. There was another right here also, past demand, future supply. Oopsie, sell. Where? Sell. But in addition to all other pairs transitioning to the upside, buyers are also looking to step in and capitalize off this level of support on GBP JPY. 1, 2, 3. Is this a fourth rejection? Going to the low time frame on GBP JPY, we actually did see transition and we are actually hoping for follow through. So my trade entry and setup was that level of resistance with this maintaining the low time frame structure. Upon this level being rejected once, rejected twice, finally broken and giving us bullish indications like this, entries, it's possible that the market will open giving us a really nice long entry on pound yen. So nothing major in terms of yen, just simple break and retests. You may find other low time frame entries as GBP has just been melting, and in cases like this it's perfect to trade in the direction of the trend instead of trying to be Superman and predicting some switch within the trend in any cases like that. But that's pretty much it for Backtest Fridays. Give me a feedback, ask questions in comments. I'll try to answer as much as I can, because the only reason why I do this is for the feedback, guys. Like I just like helping. I just like helping. If you get knowledge from Backtest Fridays, then my job is done. Alright? So big up on yourself, hoping to learn something, and hope you guys have a productive week. Peace out.